Welcome to the Times of Industry show. I have a phenomenal show for everyone today. If you're a Winston Gold Corporation shareholder, if you're not, and if you're just interested in understanding a lot about the industry, about mining, about gold, the guest I am on today has spent 22 years with Rio Tinto, 9 years with Newmont, and after spending 30 years of his life with these two giants, has moved across the sphere to the junior mining sector, became chairman and the largest shareholder of a company called Winston Gold, which our company, Wealth Research Group, has been partnered with them for public awareness and for marketing for years. And it's done very well. And I am very happy to get both an update on the gold sector about Winston and just to chat with Joseph Carrabba. So thank you very much for joining us.
Well, thank you, Joseph, and to all of your listeners out there today and shareholders and potential shareholders. Thanks for your time today. I appreciate it.
Thank you, sir. I'd like to ask you, first of all, about 2020. Been an unprecedented currency creation year. Government debt accumulation in the name of saving the lower income brackets, women, minorities, the people that have really been hurt by COVID, and obviously in the name of saving the stock market and the bonds market from freezing in March and April. It's just been unbelievable, the blanket of currency creation. And then the Fed came in and bailed out the entire Russell 2000 junk bond. So with everything that's going on, do you think gold is heading to the $3,000 zip code, like Bank of America says, like Wells Fargo and Goldman Sachs give it 2,300 in 2021, Paul Singer, Paul Tudor Jones? I mean, this is pretty much something that I've never seen. So many bullish people on gold. So yeah.
No, I'm certainly right there in lockstep with him for many of the reasons that you just explained. I mean, the pandemic has hit everybody, governments and everybody else sideways as well. We're getting some good news now with vaccines, but on the other hand, too, we're getting to get ready to go through a very difficult time once again with the COVID cases ramping up until the vaccine comes. This is going to just hit businesses hard, the poor small businesses once again that we're we're getting shutdowns once again in the U.S. and I know Europe is suffering as well with it. So I think as the vaccine comes, I think the businesses sectors are still going to lag. There's still going to be a need for government support if it ever comes with it. The bankruptcy and foreclosure cases are stacking up. The government
evictions.
They just won't let them go yet, if you will, but they are certainly there in line for that. And if you will, unfortunately, someone's going to have to, pay the piper, right? Whether it's the banks, the individuals, or whatever. And, all this just mounts up to a good place for the gold industry that's always been the safe haven. It's been the strong value for currency to offset hyperinflation. And as we go into 2020 and the new world order, it certainly looks the same, and it bodes very well for gold.
Okay. So let me ask you about your experience with this industry. 22 years in Rio Tinto, 9 years with Newmont,
right.
CEO, chairman of Cleveland-Cliffs, which is right. Iron ore and coal. And right. And then you switch it over. You went from a conglomerate, from a big company, thousands of employees, lots of bureaucracy, a big board, etc. And you said, look, I want to be involved with a junior mining. This is a very nimble company, small company. First of all, why? What made you change? This is a big business detour. So what really excited you about this thing?
Well, my background is really as an operator and as a project guy. I mean, that's where I've had my success and been able to bring other companies that I've worked with, like Cliffs, into that is understanding the technology of the business and how you operate a mine and move forward. Fortunately through my life too, I was able to move up the ranks and get in the C-suite so I could understand the capital markets as well. And I just think when I look at the junior gold industry, there's just a real niche here that hopefully someone like myself that I can bring to the table and add value to. Many of the juniors, it's tough. I mean, you're raising money that for years they were raising money in an $1,100 environment. There was no pizzazz in gold. First cryptocurrency came in, which is coming back. Then cannabis came in, and everybody got excited about that. And gold was left behind as without, any upside. And now gold is lifting up. I think, there's a great appetite to consolidate a few of the juniors, the right ones that come in, they go with it from a capital side. You'll get multiple mines that come out of it, and you can grow those ounces per ton that come with it. So I just see a real niche of adding value in here, or to what's been existing. It's been around, but it just can't get off the ground. The folks, as hard as they try, don't know how to kind of put all the pieces together. Some very smart guys in this industry, obviously well beyond me, but they've just never kind of put all the pieces together. And that's what we're trying to do now with Winston Gold being the flagship, getting ready to go into production.
Okay, so let's dig deep with Winston Gold. First of all, is it true that you either resigned or moved on from Newmont? You had a pretty substantial salary. You took a lot of risk moving from that type of environment where it's a salaried employee into
Right.
the role of not only a chairman of Winston, but you're the largest single shareholder of the company. So,
Right.
can you talk a little bit about that move?
Sure.
I don't know if I'm saying this correctly, but it was around $300,000 base salary without bonuses per year with Newmont, which is pretty
That's
good.
correct.
And then you switch over to Winston, and that's venture risk. That
Right.
you put your own money in there, you bring associates in there, so
Right.
you're all in.
Right.
Tell us a little bit about Winston Gold, because our company, Wealth Research Group, has been partnered with Winston for public awareness and marketing since the company
Right.
was 6.5 cents. Lately, it's almost hit 19.5 cents, which is 300% that, or 3x.
Right.
But this is still pre-production, so
Oh yeah. Yeah.
I know you have a lot of updates for us.
Right. No, listen, I had a great run in the large companies. Again, being able to move up. Newmont is a fabulous company. There was nothing wrong there. I was just ready after 9 years, and I do like term limits within boards too. I ran the sustainability, the operations, and the safety committee there, and really learned a lot. And I hopefully contributed a lot that came with it as well. But the time came, last June with the Goldcorp merger. There was going to be 17 people on the board. I was ready to do the next chapter of my life, if you will, which was to really, I love to do turnarounds. I like the risk of the venture of getting a new business going. I mean, I obviously do my due diligence all the way through, which I did with Winston when I met Murray Nye, the CEO. I went immediately out to Montana and spent days on the ground, from the drill bit to the core shed to the assay lab to the financial model and the geological model. And that's when I bought in. It wasn't on a whim, or a knee jerk. I'm not that risk. I'm more risk averse than that. And I go through all the steps when I did that. And what did I like about it? Well, it's in a mining friendly state. It's permitted with it. It's a high grade small vein mine of 0.3, 0.4 ounces per ton. These guys really know their business. And, we resurrected an old mill that was 35 miles away with about $250,000 worth of capital. So we've got a mine and a mill. So we've got an end-to-end process to produce gold concentrate, and it's fully permitted. And boy, I don't say luck out, but we've got some great people too. That was my highest risk. I thought, was, where are we going to get the people to do this? And our chief geologist came out of Barrick's Cortez mine. Our mine engineer surveyor came out of Pogo, out of Alaska. Our mill superintendent came out of Sarbanes Stillwater, the platinum palladium producer out of West Yellowstone. We have two fantastic mine superintendents, if you will, that have been in the small vein mining all their life. And of course, Murray has been around it and his team has been very successful, in Montana with the Drummond mine in the past. So I thought everything fit. And boy, it's hard to find everything from end to end and have the permitting in place as well, Eeyore. So that's what I was excited about when I moved into this and helped out with it.
How did you first hear about it?
I'm not on much social media. When I retired, my kids put me on LinkedIn, and it actually came through LinkedIn. There was a random hit on LinkedIn that I followed up on, which I rarely do on social media. For those of you out there,
pretty amazing.
But yeah, it was. It really was, and it just all fell into place.
So I have a quick question about warrants. Per the company's presentation, there's about $27 million, I think Canadian, that are in the money warrants. That's going to be a really good opportunity for the company to become very robust, because the total market cap is only $50 million right now. So
that's right.
For one, is there a strategy that you have in place for the warrants? And secondly, can we talk about what's going to happen going forward? Because I know you're literally a few weeks away from starting to get the ore out of the ground. That starts to be a cash flow company, very de-risked compared to where you've been in the last 2-3 years. So different type of investors can look at this from different angles. There's now a value component to it. So love for you to share with us the updates on this company, because man, we've been I'm very excited about this for years, and we now see the end of the road.
That's right. It's been a long time coming. So let me address. You had multiple questions in there. I'll address those. So first, on the warrant, you're right. And what we found with we have almost all of our shareholders. We have over 3,000 shareholders in Winston now, and many of them are private individuals that have come, and they really don't understand what a warrant is, if you will. That may be astounding to some of your shareholders, but so we've had a couple of educational Zoom calls, particularly down here with the U.S. investors, on what a warrant is, what it does for the company, how it stops further dilution of the company, and how they can exercise them. They've got, I think most of them go out to 2023. They were 5-year terms on those, that, hey, you guys can hold, you can sell some stock and buy it back. You can write a check, but it all goes, all this money goes to the Treasury to allow us to expand and move forward without further dilution to the company. So I think the biggest thing, our strategy was just getting out there and making sure people understand what they had in the warrant, because they've been very, a lot of the folks got in at 4 and 6 cents. And like you say, it's 18, 19 cents now. So they've been very excited on that, and they kind of lost sight of the warrant. So the idea there is to keep making sure people are aware of their warrant and how they work, and try and bring that money into the Treasury if that's what the shareholder chooses to do. So that's the warrant side of it as well when it comes from there. And yeah, we're all here. The team is very excited. We've got everything in place. We've got about 10,000 tons of ore on the ground.
Wow.
With about a 0.3, 0.4 gold value in it.
Okay.
With it, the mill has been resurrected. As I say, it's got, we put about $250,000 into getting it right, so we can get, as much recovery of the gold as possible out.
Yeah.
We bought a new jaw crusher to put in front of it, and a used cone crusher as well.
Okay.
We are in the process of electrifying the crushing circuit, and we're ready to go. We're
It's
waiting.
really exciting.
This is crazy, I know, but we're just for full disclosure, we're waiting on one electrical part, but with the COVID supply chain, it should be coming any day now, and we will be up and running and putting ore through that mill and starting to get gold concentrate. So got the last brick in the mill, and as they say, and we're ready to move from a junior explorer into a producer. It's very exciting.
Pretty amazing. Yeah, and by the way, Montana, people always think winter is harsh, etc. These are county maintained roads. The mill is in a good location. You're about 30-35 minutes from Elena. So
Yeah,
year
that's correct.
round, everything winter, and this is all underground. So
Right.
nobody freezes, and it
Exactly.
should be good
Yeah.
to go.
Yeah, no, that's exactly right. You know, great infrastructure for a mine and a mill. You couldn't ask for more. The electrical lines run right across both properties. As you say, we've got well-maintained roads, 2-lane hardtop highways going between the mill and the mine that goes with it. We've got plenty of water in both locations for processing and dust suppression. And yeah, we've got a great set of miners to work. We just insulated our new our new maintenance shop, so we can do that through the winter and in comfort. And the new dry for the guys to change clothes when they come in and out has just been up and running as well. So no, we're set to go for the winter. The guys are well far enough underground that they won't be affected by the temperatures as well. So we're good to go there.
So with 320 million shares outstanding right now,
Right.
with the shares, let's say around 16, 17 cents as we're doing this interview, and it will be released very timely. So around a $50 million Canadian market cap.
Right.
Let's talk about valuation. What can a prospective listener to this understand about the company and what it's really worth when you look 1 year ahead? So how much are you looking to produce, and how does the market compare you to peers that produce the same amounts?
Right. So what we're doing right now is we brought the developmental ore out, as we call it, because now when we're on the 3 veins that we're starting to do the headings on, they have to develop those veins. They're called sill drifts that go in, but we bring ore out, you know, in a modest basis as we do that. The ramp up is to get up to 150 tons a day. We're
Okay.
well on path to do that, and with that goal, we will reach on an annualized basis 30,000 ounces of gold production a year.
Okay.
Just starting to drill the Custer vein underground over to the other side of the mining property as well. So we think within the next 2 years, we can go from 30,000 to 50,000 ounces of production a year as well. So we've got brownfield growth, if you will, not speculative greenfield growth coming on with that Leor from there. So that's what we're looking at to move forward with, and really focusing on getting those all of the mine developed so we can get that the comparable ore out to get to 30,000 ounces a year. So that's what we're moving forward with right now.
Very exciting. So let's put this into some sort of a theoretical mathematical analysis.
Right.
So 30,000 ounces a year. I
Right.
know several companies that produce that amount. They're not $50 million Canadian. They're much more valuable. So
Right.
how can people
So
understand? You have a sustaining cost of 850, around 850, 950.
We're about 900. I'd up it a little bit. Again, we're conservative, about 900. So yeah, I mean, the math just works like this, and I'll let the folks. It's not right in front of me, and I should know it by heart. But if you take the 30,000 ounces, multiply it by 1850, that's going to give you your revenue.
Yeah.
Again, our all sustaining cost is $900. You know, so 900 versus 1800, so you've got about a $900 profit. You take some taxes off of that, but in year 1 there won't be any taxes because we built up so many losses through the years. A typical company that comes with it.
Okay.
You take that for free, that net income off of that.
27 million. That
Yep.
comes out to 27 million.
Divide it by the number of shares, and and from there, that's your EPS, your earnings per share.
Yeah.
And then off of the net income and the EPS, gold companies, once they get their free cash flow, they typically trade between 8 and 10 multiple. And right now, the multiple's 0, right?
Sure.
If you've got that, because we don't have the cash flow. So if you take that number, if I may round it to 20 cents just for the math in my head to be on there as well, put a 6 multiple on that. Let's say at the low end of it, now you're looking at, I say $1.20. But we're more modest as we bring it down 60 to 75 cents in that range, just by doing the pure math. Okay.
Sure. And this is not a price target. This is, make sure everyone understands the full disclosure. This is a mathematical game theory that is all about understanding what the peers that also produce 30 to 50,000 ounces of gold a year and have an AZAC, an all-in sustaining cost of around 900, what they are valued at, and it's important. So, but before we got on this call, you really intrigued me and excited me with regards to where the company is going to put that cash flow into, which is very interesting because it puts you in a category of very few rare companies that are considering a dividend policy. So this is really nice because you got the safe haven gold, so or a gold-backed company, and then you got income, which is what a lot of people are interested in because they don't want to have exposure to bonds. So can you talk about like where this company is headed 2, 3, 4 years down the road? Because I know you're looking for more properties to put into production as long as gold is up there at the 1800s, 1900s.
Yeah. I think financially, we're going into this in very good shape. We've had to raise money. We do have one last capital raise going right now, and that's just to make sure we've got enough working capital by the time that we start up and the time that we get paid for the concentrate from the refinery with that. That's the last capital raise that we're looking at, and then we'll start working off of our cash flow. We've come into this with no debt as well, which is pretty amazing for a small company. We've raised the money and we've gone slowly. We bought all of our mobile equipment. Like I say, we've got a lease on the mill with an option to purchase it as well. So we're going into it pretty debt free. And as we've told all the shareholders going into this, we are taking a different approach. I mean, outside of the capital structure, that people like to speculate on the share price and who doesn't, with it. But more importantly, in the underpinnings of this is we're looking to kind of run this business as an annuity, and we're looking to dividend, around 40% of the free cash flow once we get up and running. A little money in the bank, for bad times that may come along. But at the same time, we want to give a healthy dividend out of this so that people don't have to wait for years for it to come as well. And we will move our growth forward as we see fit. We're a conservative company. We're not going to go out and go crazy. We can't grow beyond our technical staffs and people anyway. And we want to make sure we focus on Winston. We've really got it nailed down and we're going, but we're certainly looking for a very healthy dividend to come out of this business as well. And, it's the appetite of the shareholder. And we found a lot of very good individual shareholders that this appeals to. We're not a speculative company. Share price comes, like I mentioned before, that's the math. If it comes, it comes, and we'd all be happy with that and grateful with it. I think you run your business plan first and the share price comes second. It will follow. And I think a lot of people try and do it in reverse. They try and pump that share price without a business plan underneath it. But I think slow and steady wins the race, if you will.
Fundamentals.
That's right. And that's the underpinnings we're trying to put in place with this. So we can make sure the shareholders are rewarded.
Joseph, where can people reach out to you if they want more information, or reach out to the company in general? I know Murray's very accessible. Could you talk about the best way to just chat, learn about the company more and understand, or just get an update if you're already an existing shareholder, just have a few more questions?
Sure. So our website is winstongoldmining, one word.com, winstongoldmining.com. All of our contact information is on the bottom with it. We've got updated investor presentations that go with it. All of our symbols are there. The capital structure on the business is updated. It's on there as well. And I think you'll find a complete story. I spend my day doing this, which I'm happy to do, talking to existing shareholders, giving updates. We try and put as many updates. You'll see the press releases that we've put out recently with this as well. And we talk to shareholders all day long. We're a small company. It's the shareholders that's making it for us. And we are always accessible and transparent.
Beautiful. And we're very fortunate to have been working with you guys for a few years on public awareness, on marketing. Make sure you see the full disclaimer, both on the end of this interview and at the description box below. And Joseph, thank you very much for taking the time.
Thank you, Laura. I really appreciate it. And to all the folks out there, thanks for your time as well. I look forward to hearing from you.